Bitcoin has just printed the highest daily candle close it has ever seen. In today's video, we're going to be discussing the macro and the short-term charts from a technical and a structural perspective, going over the key levels you should be paying attention to, what Bitcoin is likely to do next, and of course, the macro expectations for Bitcoin. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. Bitcoin has just closed the highest daily candle it has ever seen in the history of Bitcoin's price action, a monumental moment for Bitcoin and cryptocurrency alike. In today's video, we are going to be discussing once more the key levels you should be watching, the impact this daily candle close could have on the macro price action, how the macro price action is developing, and what to expect next on the short term. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you were interested in taking your trading to the next level, join us over on VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chart and education chat, our help, our news, our trade setup, and our daily video chat. If you're interested in getting access to all of that, you can go ahead and contact us in the pinned comment of the free channel. For more information, you can also click these links. So without further ado, let's go ahead and get stuck in. Really quickly though, congratulations to every single person on this channel who has been paying attention, who has been following along. If you're new here, welcome to the channel. It's great to have you. We ended up buying Bitcoin all the way down at 16.5K. We discussed this moving into that point for multiple months, talking about why the bottom would be in there, what we are seeing with the developing price action, why macro reversal structures are developing. And again, if you are in that VIP channel itself, you would have got access to my exact buying plan and my exact entry points. And you can see we're buying down at 16.5K and 18K primarily. So a massive return on that, around 300+% already up from that point, which is fantastic. I remember a lot of people at the time were telling me, Whale, you're an idiot for buying at 16.5K. The price action is going to 3,000, 10,000. But again, like always, the majority are always wrong and the biased are always late. So let's move over to the market data, will we? So the market data for today. 24-hour volume is up 80%, sitting at a total of 303 billion. 24-hour liquidations are up 54%, sitting at 437 million. Of the 437 million, we can see 253 million have come from short positions, and a total of 183 million have come from long positions. This again is indicative of a large amount of volatility. And if you paid attention to our video over the last couple of days, we were telling you we had a downward consolidation, right? We had the price action moving downwards in a downtrend. We had the momentum moving downward. But while we had that, we had again lower, or should I say higher lows. We had our low, we had our higher low, and we created an even higher low. This over here, these higher lows printing while in a downtrend with momentum moving downwards, was indicative of absorption. It was telling us that the selling pressure from our $63,000 resistance was becoming weaker and weaker as the buyers were stepping in earlier and earlier. That then developed again a neckline of resistance, which acted as a trigger point for a large move toward the upside if broken. We saw momentum flip positive, okay? We saw the price action break out of the downtrend, and that is when we ended up taking our entry on Bitcoin. You can see our entry was taken back over here at around 61,000-ish, and you can see a large move toward the upside, as we talked about on the channel, did actually play out exactly to the prior all-time high. Yesterday's video was literally saying we are going to see a new all-time high for Bitcoin, at least retest the old one, and that is exactly what we have now seen. So congratulations again if you paid attention to that. Let's go ahead and jump into some more data. So the DXY is I mean, the DXY isn't looking fantastic, right? We saw a breakdown of our 2-month-long uptrend, both on the RSI, suggestive of negative momentum, and the trend represented by this black diagonal trend line. We are now in a short-term downtrend. We are still expecting, if we just go ahead and delete everything, we're still expecting a move down to retest these low points. We're looking for around 103 to 102.5. Again, if we fail to hold this area as support, that is when we could potentially see, corrections down to 100. And even 101, these sell-side liquidity areas would be major targets for potential corrections for the DXY. Overall, not looking fantastic for the bulls to really step in and push the price upwards. The key level of resistance we would absolutely need to break above is going to be this high point at 105. Of course, if we do break above this level, that is going to be very bad for the broader markets, such as S&P and the Dow Jones. While we remain under this level, we are still expecting a good bullish reactions on these markets moving forward. So let's move over to those markets. The S&P 500, again, looking pretty decent. We have now seen what looks like a very long time of only up. If we just go ahead and measure this out, it's been essentially 18 bars, so 18 weeks now with essentially only up, with maybe just one major correction here on the S&P 500. Looking at the price action chart over here, again, while we sit above that 5,000 psychological level represented by this red line, we are still expecting a continuation upwards. If we drop below 5,000, that is the trigger point for a correction back down to this area of support. If we retest this area of support, this should act as a launching pad for a macro continuation upwards. Again, we are very much bullish while we remain above the prior all-time high. If we lose the prior all-time high, the charts are going to look very bad. So we want to remain above the level, and again, if we do remain above 5,000, we are expecting this trend to continue the strength toward the upside. That doesn't mean we can't see a short-term correction. We could correct down to 5,000, but provided this area holds, it is pretty much irrelevant because the macro charts are still looking fantastic. The same goes for the Dow Jones over here. Again, we are retesting that $39,000 trigger point. We would like to hold the weekly candle above the 39,000 trigger point. If we fail to do so, we could see a small pullback to 38,000. Again, that 38 to 37K level is going to be the equivalent of the 5,000 on the S&P. A loss of that level could result in a correction to retest that prior all-time high price. While we do remain above this level, we are expecting a macro continuation upwards. So all in all, charts are looking strong. Charts are looking good. However, they are now starting to show a little bit of signs of exhaustion. We may be experiencing a week or so of corrections upcoming relatively soon, but we have to wait and see how those weekly candles close out. But I wouldn't be looking at this and saying we're looking bearish. We're fantastically bullish. Of course we're bullish, but with this, we have seen a very large move upwards. We're starting to see exhaustion develop. We could potentially see some deviation at this level that could result in a healthy, and that's a key word, a healthy short-term correction. So let's move over to Bitcoin, guys. But before we do, a quick word from Bitget BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right-hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's move over to Bitcoin, and like we said, today is a monumental day for Bitcoin as we have now officially closed the highest daily candle in the history of Bitcoin's price action. Moving back, the prior highest daily candle close was on, what was this, November 8th of November 2021. That was at a price of around $67,500. So we actually ended up closing, if we just scroll over to the right, our candle at around $68,252, which is around $750 higher than our highest most daily candle close. And this is a fantastic thing. Of course, it is indicative of massive amounts of strength. And we're going to be discussing the next macro moves of Bitcoin, what this means for the macro price action in just a moment. But before we do, we need to go ahead and discuss the short-term price action. So moving over to short-term price action, guys, we can see a lot has really played out. And if you've been following the channel, you would know we expected this move to play out perfectly. It has now played out. So we can go ahead and just delete these levels on the chart. If we go ahead and delete these levels, we can now take a new look at what is happening and what we expect. Now, obviously, as we breach prior all-time highs, we enter price discovery, right? Price discovery is essentially an uncharted territory, area of which the price has never really moved in before, and an area where we don't have historical price action data to infer what could potentially happen moving forward. So it becomes a little bit more speculative when you're looking at the macro charts, and that is why when we enter these price discovery ranges, it is very important you are assessing what is happening on the smaller time frame with developing price action, as you don't have historical price action to guide potential probabilities or directions of price. So we have to really focus on what is happening with the price action and how that price action is developing. So first and foremost, we're going to go ahead and take a look at our structures, dragging that same RSI trend line upwards now. So this is going to be our momentum trend line. This is going to be a reflection, okay, of this cluster of price action, which is going to be this recent surge or this recent uptrend we have had after the 68K break. That is going to be reflected by this section of the RSI, which is going to be reflecting we have again positive momentum as the price action has been rising. With that, the RSI is creating highs, the price action is creating highs. This is indicative of strength. We are seeing extreme strength in the price action right now. It is not showing massive signs of weakness or exhaustion as of yet, besides potentially the fact that we are now moving into that 69K range, which we know as to be a historical area of resistance. So we have slight biases to potential corrections moving into this area. But when we're looking at the chart objectively, we are still watching momentum. So we want to see, again, for any sort of correction develop, we need to see that RSI breakdown. If we see a breakdown on the RSI, that would indicate that the developing strength the developing strength within this range has now flipped negative. Okay, and that negative flip in strength will again result in a correction in price action. Now, our prior areas of resistance become current areas of support. So we look at where corrections could take us to. We would be expecting, again, these whole numbers, 66,000, 65,000, but more importantly, the most significant one is going to be this range between our prior high side liquidity, okay, and of course, this area of support, which was prior a resistance at 63,000. If these levels are broken down, then everything we discussed in yesterday's video again becomes valid in terms of the correction. If we lose that $60,000 level, that is when a correction will develop on the macro chart. And again, if we do see that correction develop on the macro chart, it doesn't matter how low we go, provided 48K is able to hold a support, the macro trend is intact, and we'll explain that in a moment when we go to the macro charts as to why 48K is the key point in keeping that macro trend at a healthy state. So moving over to the short term, do I think we're going to see a huge correction downwards? I don't think we're going to see that, but we are now entering price discovery, so it's very important to watch the developing price action momentum to infer potential next moves. At the moment, there is no reason why we would not expect the price action to continue upwards, maybe 69,000, maybe 70,000, while we have strengthening momentum, okay, and a active uptrend in the price action. If we were to see that RSI breakdown, that is when I'd be expecting a correction. Again, we are looking for those whole numbers for potential bounce points, and we are still very strong while we remain above 63,000. So I can't say too much more than that today because the price action is still developing. Of course, with developing price action, we have to watch how it plays out, and we are now entering a price discovery range, so it makes it very hard to give specific targets. We are more or less acting and adapting and reacting, most importantly, to what is happening with the price action. So all in all, expect a continuation upwards. We're still looking for 69,000 on that chart. Moving over to the daily chart again, guys, like we said, the highest daily candle close Bitcoin has ever seen, but not just the highest daily candle close. We have now moved leaps and bounds over the highest prior monthly candle close. So let's go ahead now and discuss, I guess what everyone's really wanting to know, is Bitcoin going higher? Let's talk about it. So let's move over to that monthly chart. And the monthly chart is a little bit delayed. We can see Bitcoin's monthly price action is only at 63,000 when the real price action is at 68,000. Again, the BLX chart, the Bitcoin Liquid Index, does take some time to update with the current prices, but it's okay. We don't really need the current prices to discuss the structural levels. So there are 2 or 3 key structural levels I want to talk about. 2 structural levels I want to talk about and 1 technical level I want to discuss. The first one is the dotted trend line. And you know, I've been talking about the dotted trend line. This is all the way back down at 60,000, right? 16,000. We're talking about the dotted trend line all the way back down over here. We're telling you the dotted trend line is a trigger point for us to enter a bull market. We know it's a trigger point for us to enter a bull market because of 2 things. Number 1, we see that the trend angle, okay, the angle of the trend from the all-time low to the point at which we break the dotted trend line to the point at which we break the dotted trend line and the all-time high significantly steepens. So we have a trend angle that significantly steepens the moment at which we break above that dotted trend line to the all-time high. That is suggestive of high time frame strength, volume, volatility, entering the market over an extended period of time, which is what we traditionally call a traditional bull run. So we know that the bull run started upon the break of 48K. Now, if we look at the price action, we can also see that when we do break above that 48K level, we actually never come back down to retest that dotted trend line. And this is held historically accurate in the past 2 cycles. More importantly, we don't even come close to retesting the dotted trend line in the next bear market. You can see we didn't even come close to retesting that dotted trend line. In this instance, we didn't even come close to retesting that dotted trend line. So according to the price action, historically, we may never see a retest of 48,000 again. So that means we have a very clear invalidation point. If we were to see a retest or a breakdown of 48,000 again, that would indicate that the developing bull run has become invalidated. Now, I don't think that's going to happen, but it is something to put in the back pocket for an invalidation card if you want to play it or if you see it happening. So moving back over to a monthly chart over here, the next key structural level is going to be that monthly high, the solid black trend line. We can see every time we break above this level, we essentially move in this only up territory. It's only up territory to the next all-time high. And if we just go back and look at the price action over here, right, and say, well, the price action from the bottom to the top was up 600%. People were saying, whoa, it's up 600% already. Surely we're going to see a correction. Surely we're not going to go any higher. And then we continued massively upwards. And the same thing happened in the prior cycle. And the same thing is likely to happen in this cycle. A lot of people don't know how to trade bull markets and don't understand the sheer amount of volume that can actually come into these markets when we enter these new uncharted territories. Now, this isn't me saying we're not going to see a correction. We could see a pullback from this level. We did see an area of consolidation back in 2017 at this prior all-time high on the monthly chart. However, just like we said in that scenario, we didn't come close down to that dotted trend line. We saw a pretty decent correction, which took us about midway point. The midway point in this instance would take us down to potentially 57,000. And as we discussed in this short-term chart, for $57,000 to be a viable target, we would have to break down below 60,000 because 57,000 is going to be that next area of support, which is this cluster of price action. And bring up the VIPV, we can see it is a gap in the VIPV, which would take us to 57,000. So 57,000 is a potential bearish target. For that to develop, we would need to see a breakdown of the RSI. We would need to see the price action weaken over the coming weeks, lose the $63,000 range, break down to 60 point, and then 57,000 would be a target. Again, this would be a major bouncing point for Bitcoin. That is what we're taking a look at for the bearish scenario. So let's go back to the bullish scenario here. What we have noticed, guys, is that if we take a look at the RSI, we can see that every time we break over that 60 point on the RSI, 68 point on the RSI, we enter a bull market. Historically, the vertical line, which I'm going to show you, is the breakout. That is the breakout here. What happened after? We entered a massive bull market. Vertical breakout over here. What happened after? We are potentially entering a massive bull market. Vertical breakout over here. What happened after? We entered a massive bull market. So we are looking now at the momentum on the macro charts, as the momentum is suggesting we are entering this parabolic phase of this cycle. How long will that last is a tricky question. If we take a look at prior cycles, simply doing a date range analysis from the point of that monthly candle break, so we're retesting here to the all-time high, It's 10 months. From the point of that monthly break, which is a retest here, to the all-time high is 13 months. So that tells us we could see anywhere between 13 to 10 months from here being an all-time high, which takes us around maybe even March, January 2025. So it's very, very hard to project exactly where the top is going to be in terms of a date range trend. If we're looking at prior cycles, from the point at which the RSI breaks, we generally see around 10 to 13 months. If we want to be specific, around 12 to 13 months from that point of breakout to the next all-time high. Something to consider, guys. Moving over to the weekly chart from a technical perspective, again, so many signs have been bullish for so long now. If we just move over to our market cipher A and jump over to the monthly chart really quickly, we can see that we've printed many bullish signs. The first one was the market cipher A blue triangle. We saw every time we printed a blue triangle, we remained above, okay, the 16-17 moving average, okay, until we made an all-time high. And we only broke the 16-17 moving average, which was represented by this red cross, after the all-time high was printed. So if you were to see a red cross prior to creating an all-time high, that would be invalidation of the bull run. Until then, we are expecting the price action to continue upwards into the third and fourth year of the bull market, the 4-year cycle, okay, to create an all-time high. A very bullish indicator. The next one, of course, was the monthly breakout of, you know it, the baseline of the Ichimoku cloud. This is something we've been discussing on the channel for so long. We were talking about this all the way back over here. We told you when we broke a monthly candle over the baseline of the Ichimoku cloud, okay, the red line, we would see the bull run initiate. And we are not going to see a monthly candle close below the baseline of the Ichimoku cloud until after the all-time high. If you look at when we broke above the baseline of the Ichimoku cloud, I'll draw a vertical line. It was over here. If you look at when we closed below a monthly candle, it was all the way over here. This entire phase was essentially a bull market, parabolic bull market to an all-time high, an eventual start of the bear market. If we look at the gain over here, we broke above right over here, we closed below right over here. The same thing, the parabolic bull market to the all-time high and the start of the bear market. It is the same thing over and over because these indicators are derived from momentum. Momentum is derived from real-time changes on the short term, on macro, whatever time frame you're looking at the strength between buyers and sellers drive price action. Remember, price moves because people are clicking buy or sell. That is how price action moves. So if you want to identify where the price action is going next, you have to identify the developing changes in volume, strength, momentum, velocity between buyers and sellers. You're analyzing what the buyers and sellers are doing. That is what technical analysis is. Okay, guys, I'm going to leave the video there. Thank you for watching. Hope you have a fantastic day. Things are looking very up for Bitcoin. I'm looking very much forward to doing our next video because, again, we can see Bitcoin is potentially showing some signs of exhaustion at the 69,000 at this all-time high point. Bitcoin has got a lot now. If you're looking to take some profits, now would be realistically the time to be scaling out of some swing positions, of some scalp positions, of some leverage positions, spot bags. I'd be hanging on to those myself personally, but I'm taking massive profits on all my long positions at this point. Thank you for watching, guys. I'll catch you guys in the next one. In the next video, we'll discuss again Bitcoin and everything in between, and maybe go over some altcoins too, in regards to how altcoins behave moving into parabolic phases of the Bitcoin bull run. Thanks, guys. See you then. Cheers.